5 years after the worst financial crisis since the Great Depression, former U.S. Congressman Barney Frank says the risks of another calamitous bank failure that could throw the global economy into a downward spiral have diminished.
Look, the economy is better off than it was 5 years ago for almost everybody.
But while Frank insists the risks have been greatly reduced, economists say the U.S. recovery remains mixed. Fiscal reform advocate Robert Bixby at the Concord Coalition says this was no ordinary crisis.
It was a major catastrophic bursting of a bubble, and that takes a lot longer to recover from.
Former Treasury Secretary Henry Paulson, who helped bail out some of the biggest financial firms in 2008, said as unpopular as it was, TARP, which authorized the government to purchase up to $700 billion of troubled assets, helped prevent a bigger crisis.
And the American people never understood we did these to prevent a disaster, something Barney and I both understood. We could have had something that rivaled the Great Depression.
Now, 5 years later, the biggest banks are profitable again. U.S. stock prices are 26% higher than they were in 2008, and America's top CEOs are earning more than they did before the crisis. And yet, unemployment remains high, and the median income for Americans is lower than it was before the crisis. The OECD says the United States now has the greatest income inequality in the developed world. Barney Frank has an explanation.
Inequality in America, the monopolization of income at higher levels, it wasn't caused by the financial crisis, and it predates the financial crisis. So resolving the financial crisis, I guess I would put it this way. What we did with the financial legislation was to stop bad things from happening. But nothing in there makes good things happen.
Some blame the two-sided recovery on dysfunction in Washington. Economist Joe Gagnon says the drawn-out budget battle of 2010 and deep government spending cuts enacted by Congress earlier this year ensure that the recovery will remain tepid. He worries about a bigger budget battle at the end of September, when the federal government spending authority runs out.
I think the only thing that could hurt us in the short run would be a catastrophic political impasse in Washington. You know, a government shutdown that would drag on for months.
Another potential wrinkle, on Wednesday, the Federal Reserve is expected to announce whether it plans to scale back monetary policies that have kept long-term interest rates at record lows. In Washington, Mil Arcega, VOA News.